Good evening, everyone. Myself, CA Vikas Singh Chauhan, your host for the today's webinar on global trends in internal audit. A look ahead. So the webinar will be for the 3 hours from 6 to 9 p.m. Organized by Internal Audit Standard Board of ICAI, hosted by Bahadurgarh branch of NIRC of the ICAI. I will request Mr. Prashant ji, CA Prashant ji, to start with the opening remarks.
Good evening, all. I, CA Prashant, Secretary, Bahadurgarh branch, welcome you all in this webinar on global trends in internal audit, organized by Internal Audit Standards Board of ICAI under the chairmanship of CJS Nanda ji and Vice Chairman Shri Gyanchand Mishra ji. I personally thank the committee to provide opportunity to greet the movement, to greet the eminent professionals of our institute. और इससे ज्यादा और कुछ कहने की आवश्यकता नहीं है. आईसीआई में सीजीएस नंदा सर क्या है ये सभी को मालूम है और इनके बारे में सिर्फ एक ही लाइन बोली जा सकती है कि यूं तो आईसीआई में पर्सनैलिटीज और भी है पर सीजीएस नंदा जी का अंदाजे बयां कुछ और है. With this point, I hand over to CA Vikas Singh Chauhan sir.
Thank you, Prashant ji. Thanks for your, as you already said, I have a personal experience of working with Nanda sir. He's my principal during the articleship.
Yes, sir.
So a lot of things to learn from him. And as a formal introduction, although, as you said, no introduction is required for him, but still he's presently
Exactly.
designation chairman of Internal Audit Standard Board of ICAI. Presently Central Council member, present chairman of Internal Audit Standard Boards, Digital Accounting and Assurance Board, vice chairman of Banking, Financial Service and Insurance Committee. Nanda sir, now the dais is yours, as always.
A very good evening, ladies and gentlemen. CA Prashant, the Secretary of Bahadurgarh branch, the earnest speaker of today's sessions, my very dear friend Mr. Rajiv Gupta, who has always helped and created value and worth for the board, Madam Archana Moge, who has a deep inclination to contribute, Bharat Garg ji, and my younger brother, Vikas Singh Chauhan, who is now onto his career path. Ladies and gentlemen, this series, looking forward to internal audit practices in times to come. This has evinced a lot of interest. People are very much excited to be a part of this. I want to tell you that when we hold programs, I get so many reviews from people who are very keen and who suggest near topics that can be incorporated so that members are able to add value. I took a dream. I started this committee, Audit Standard Committee, way back in 2004. I'm the founder chairman of this and saw a dream that the entire profession gets inclined to internal audit. And now being the chairman of DAB, Digital Accounting and Assurance Board, the board which has promulgated the first set of 23 forensic standards in the globe. I'm so happy that now chartered accountants have started practicing in internal audit in a big way. And with that, internal audit and technology has created so much flutters in the market that now they are looked as experts of internal audit and technology audit. I'm reminded of a couplet which says, on the initial days when we did not do audit and equating it with today when we are masters, a couplet which says, आते न थे जिनके जवाब उनके सलाम आने लगे, आते न थे जिनके जवाब उनके सलाम आने लगे, वक्त बदला तो मेरे नीम पर आम आने लगे. My dear friends, this profession is a highly enriched profession. I request you to inculcate newer technical skills day by day. The board is totally inclined for this. Every Saturday, 6 to 9, we have a program. Today I'm in Ahmedabad. I just addressed a student conference of over 2,100 students. I was relaxing here with a cup of tea when I got a call that today we have a webinar. We are ready to have as many programs as you want. As per schedule, we have one webinar every Saturday, 6 to 9. And every fortnightly, we have a program on internal audit standards. And the attendance is so huge. It runs into thousands. People are very keen to listen because it is a knowledge enhancing session. So I call upon all the members to kindly be involved and also give suggestions about any topic we want to. Ladies and gentlemen, I can only submit as the humble chairman of both the boards that I am here to serve you. The basic purpose of my being as the chairman of the board is to ensure that you get knowledge sitting at your home. We have recorded versions which are on Digital Learning Hub. Anytime if you want to listen to Rajiv ji again, because he is again a man with great experience, he has gone through frauds. He is called internationally to speak on programs on fraud and internal audit. So if you want to listen to Mr. Rajiv Gupta, go to DLH, Digital Learning Hub, download his videos, see that again and again. Once you see that, you will ensure that people who are successful in life are people who have spent their entire life honing their technical skills. So I wish you great luck for today's conference. I wish to thank the speakers who on one simple call agreed to come and give their Saturday evening, which is a holiday for them. I'm thankful to the Bahadurgarh branch for hosting this, and I'm thankful to my younger brother, Vikas Singh Chauhan, who in spite of the fact that was not in Delhi, he said, sir, I will moderate this program and take it to newer heights. And ladies and gentlemen, thankful to you because it comes now as a New Year and Christmas Eve. The people who have joined here in such large numbers indicate that for us, profession is above all, and we'll ensure that the flag of the Institute flies at unprecedented heights in times to come. Thank you so much. Over to Vikasji for further proceedings. Vikasji, the dais is all yours.
Thank you so much for your kind words and motivation for all of us always, and mentorship as always. Thank you so much, sir. The first technical session is New Age Auditors, the Future of Internal Audit. Will be led by Mr. C.A. Rajiv Gupta ji, presently Vice President of and Group Head of Internal Audit, Flipkart Group, the giant everybody knows. Rajiv ji is an author, speaker, and a leader in governance and risk management. He is currently working as a Vice President and Group Head of Internal Audit in e-commerce industry. Prior to this, he has worked as a Chief Internal Auditor as Diageo India, Head of Internal Control for India and Southwest Asia, Coca-Cola, and Assurance Manager with PwC India. With a great experience and exposure, we must be learning a lot from him. I will request Rajiv sir, you may please enlighten us with the knowledge, and we'll be happy to learn with you.
Thank you, Vikasji, and thank you, Nanda sir, for the invitation. Your call is always honored, and I was checking my folder. I started this year, Nandaji. The webinar of this year happened with you only, and hopefully this is the last one for me for this year.
Great. Thanks a lot, Rajivji, for considering our request. Thank you so much.
It's again ending, with you only, Nandaji, and what a energetic, background which you have set. With that, let me share some of the thoughts and some of the experience which I have in terms of how the world around us as internal auditors is changing. Be it a traditional brick and mortar industry or an e-commerce industry or any other startup or ecosystem you are working. What I'm going to share in next half an hour, 45 minutes will resonate with all of you, because when the world is changing, it is not changing for a particular industry. It is changing as an ecosystem, and it's just a matter of few months and few years here and there, by which it will become actually mandatory for you to pick up the pace. You won't have an option. So with that, let me get started with this quick 50 seconds video. Let me see if I have shared my audio with you.
Visible? It's visible, sir? Rajiv sir, it's visible?
Hanji, let me check if the audio is also, I have shared the audio. Yeah, so audio is also shared.
Very nicely depicted. Please go ahead, sir. Please go ahead.
I am not Morgan Freeman, and what you see is not real. Well, at least in contemporary terms, it is not. What if I were to tell you that I am not even a human being? Would you believe me? What is your perception of reality? Is it the ability to capture, process, and make sense of the information our senses receive? If you can see, hear, taste, or smell something, does that make it real? Or is it simply the ability to feel? I would like to welcome you to the era of synthetic reality. Now, what do you see?
So with this short video, let me welcome you all to the era of synthetic reality. What does that mean? What it means is anything and everything which is now going to happen around us. It may appear to be real to you, but it may not be real. And there is one very famous, very popular phrase which we use in information security, which is called zero trust security. Just like in finance, we have zero-based budgeting. In security, we are now coming with the terminology zero trust security. That is where the world is moving, because the gentleman you saw, while it appeared that it is Norman Freeman, but it is not a video of Norman Freeman. This video was actually made with deep fake technology. And what you just now see on the screen, the gentleman at the bottom is the one who actually made this video. So the video was shot on this gentleman, who's the bald guy you see on the screen. And with the help of deepfake technology and use of a lot of photographs and videos, pre-recorded videos of Norman Freeman, both these were mixed to create this video. So I'll share the second one.
I am not Morgan Freeman, and what you see is not real. Well, at least in contemporary terms, it is not. What if I were to tell you that I am not even a human being? Would you believe me? What is your perception of reality? Is it the ability to capture, process, and make sense of the information our senses receive? If you can see, hear, taste, or smell something, does that make it real? Or is it simply the ability to feel? I would like to welcome you to the era of synthetic reality. Now, what do you see?
So now some of you may be thinking, so what? This technology somebody may use this technology in making videos, maybe movies, Hollywood, Bollywood movies. How does this impact us as auditors or as professionals? So it is going to impact many of us, impact in the sense of opportunity for many of us, because sooner or later, this technology is going to be used to manipulate a lot of things, manipulate politics, create what we call as send wrong messaging, whether from politics point of view or from fake videos of your company CEO or the CFO, sending wrong messages, creating confusion and trying to do fraud with that. Hence, those of us who are in the space of forensics and fraud detection and fraud specialists, this is going to bring a lot of opportunity for us to, number one, detect whether that video, whether it is a real one or the fake one, and undo the wrongdoing which may have spread because of that. Now, if you go 15 years ago, spreading wrong message, incorrect message, or fake message was not that easy. Now it is very easy. All of us, even the kids, they have access to upload videos on YouTube. Yeah. If not YouTube, then Facebook. If not Facebook, then Instagram. If not Instagram, LinkedIn. Yeah. So there are so many ways through which any video can be sent from India to any place in this world and vice versa. And hence it becomes very, very important that we as finance and forensic experts, we are aware of how newer technologies are coming up and how some of these can be used or misused against our own organizations as well. That was one example. There are some more mega trends which are coming. see those brick and mortar, industries, they will definitely continue to be there. But you will see that there will be plethora of new age organizations which will come up. They are coming up anyways in last 10 odd years, and they will continue to keep getting bigger. And why so? Because many times, we get confused as to what is the value these organizations are creating, why these startups are getting so much more valued. And is there anything which is there for us as professionals, as finance professionals, as chartered accountant? I believe these startups, they will continue to flourish as long as they are doing two things. Number one, they are continue to create convenience for the customers, and they continue to solve a problem of the customers which they want to solve. So these three things are very, very important: convenience, plus solving a problem, plus solving that problem which the customer the user really wants to solve. Now, what does that mean? It means, see, everybody has so many problems in life, but we are okay to live with maybe 90% or maybe 95% of them because they are not very big. But maybe 5% of them are so big or so disturbing, we want them to be solved. Those are the ones, if you or any other company, any other professional is working on solving that problem, then your startup, be it in finance domain, be it forensic, be it something else, is going to flourish, is going to become unicorn, if not today, then tomorrow. And in case some of you are planning to intending to join any one of them as a finance professional, please see whether that organization is catering to these 3 points or not. If yes, you may go ahead, in joining it because that company is going to flourish. If no, if these 3 things are not satisfied, I highly recommend you reconsider your decision, because sooner or later, the company as well as the users, they start feeling, why to invest in this organization, why to be the customer of this type of organization. So that's how the world is changing around us. Another thing which is going to come big way, it's slowly coming up, but I believe it is going to come big way soon, is blockchain and metaverse. Now, I was giving few rounds of training to RBI officers in last couple of months. Obviously, RBI doesn't like talking about cryptocurrencies, right? So, but I still shared my point of view, and my point of view was that whether we like it or not, blockchain will come, cryptocurrencies will come. Does that mean the traditional financial institutions, they will go off? The answer is no, as per me. It means both will coexist. Both the traditional FIs as well as the cryptocurrencies will coexist. And sooner we understand what are the pros and cons of both, better we will be equipped. We means the RBI is equipped to up their game, to take care of the Gen Z. See, people like many of us, I may not go big on cryptocurrency because I'm still, sort of old age. But the Gen Z, those, who started working, just now, who are in their 20s, they are very, very young. And it is quite possible they may be much more, focused, much more interested in cryptocurrencies versus the traditional financial institutions. So how blockchain and metaverse is changing things around us? What you see on the screen, the logo of some of the organizations, these are only some, which I picked because I knew many of you would be aware of these companies. These are some of those companies who have started investing millions of dollars, either in blockchain or in metaverse. Blockchain is going to solve many of the problems, including traceability. Now, if some of you may say, "Arey Rajiv, how it is possible?" Because people say cryptocurrency will create problem for money laundering because it is not traceable. Now you are saying it will help create traceability. So please remember, cryptocurrency is one of the use case of blockchain. Blockchain is the foundation. It is like your ledger. It is like books of accounts. Yeah. cryptocurrency is only one use case. There are many more use cases. One which I am a strong believer. One is going to be supply chain. Second, in future, very strong use case is going to be smart contracts. And you may have already started, seeing some of the smart contracts, if not in your organization, but around you. These are two very important use cases. There are going to be many more. And most of these organizations which you see on your screen, they are investing on some of these use cases, because every organization which is selling goods, they need supply chain. And when they need supply chain, they need better control on their entire supply chain journey. Let's take an example. Why we started loving Ola and Uber 10 years ago? We started loving them because earlier when we used to book a taxi, the taxi operator used to tell us, हाँ sir, आपका taxi book हो गया है, आपको सुबह 10 बजे मिल जाएगा. Now we used to keep our fingers crossed कि बाबा 10 बजे आएगा कि नहीं आएगा, because we have to go to airport, right? And then there used to be some गोलीबाजी, नहीं सर मैं ट्रैफिक में फंस गया, ये हो गया वो हो गया, and then we used to feel it highly unpredictable. One biggest advantage which Ola and Uber brought was traceability. What does that mean? It means the moment you booked your cab, you could see where your taxi is on your mobile phone. So now the uncertainty was gone. So you knew that since you have just booked the taxi, it is showing it is 2 kilometers away and the car is slowly moving towards your home. So if it is moving towards your home, 2 kilometers, maybe 10-15 minutes, he will come. Otherwise, you can call the driver, not the taxi operator. So I'm not talking about current year. Current year, a lot of things got messed up. I'm saying why Ola and Uber came into picture at first place. Traceability. We want control on what is there for us. We don't like to be in dark. Blockchain is a technology which can do wonders as far as traceability is concerned. Yeah. To give you two quick examples of Metaverse as well, you see PwC, PricewaterhouseCoopers, their Hong Kong branch, they have purchased a land in, I think, Sandbox. Sandbox is one of the very popular virtual world. And what they're saying that tomorrow, if the Gen Z are going to work from that virtual world, we would like them to work in PwC. And we want to make sure that they don't have to come in the physical world PwC, but the virtual world PwC, so that they don't have to come out of the virtual world. And if you see McDonald's, may I ask the tech support team to please put on mutes? I see, I hear some noise. On the other side. What McDonald's is doing. So McDonald's has also purchased a land in one of the virtual world, and they are saying that if Gen Z is going to work out of Metaverse, if they are going to play in Metaverse, they will get hungry also. If they will get hungry, why they have to bring food from home? We will set up our own store, McDonald's store in that Metaverse, and the customer can order his burger in the Metaverse itself. The moment he orders and gives us money, we will deliver his burger physically wherever he's sitting. So just think about it. Those of you on this Zoom call who are into IT audits, you see the opportunity for you to get expertise as to how the server which is gonna take orders in virtual world is gonna interface with the physical world server of order management system, because order management keh lo ya order fulfillment keh lo, that interface has to be created, because ek virtual world mein hai, ek real world mein hai. And how it will be ensured that if today Rajiv is virtually working from Bangalore, tomorrow he may be virtually working from Goa. Nobody would know, because I will be actually working in Metaverse. How McDonald's will get to know that today's burger has to be delivered in Goa, not in Bangalore. So that is an opportunity for those of us who are into IT audits to get expertise into this type of future configurations, future IT setups. Not future, maybe it's not very far in the future. It should come very, very soon. Because if they have purchased land, they don't need real bricks to create the virtual store. It is gonna come up very, very soon. So these are few examples, and I have given some examples in the next slide as well. I will share this slide deck with all of you. So organizations are spending money, and as I said, both the worlds will coexist, whether we like it or not. Yeah. With that, let me quickly, move to AI, ML, and RPA as well, because when I speak in some of the forums, I hear people using some of these terms interchangeably. AI, ML gets mixed up. RPAs gets confused sometimes with machine learning. So let me decode so that in the next few slides we all are on the same page. See, artificial intelligence is an umbrella. It's an umbrella of all those softwares which can think exactly like human being for some of the aspects. So thinking like human being, a software that is called artificial intelligence. Simple. And it's an umbrella. Under that umbrella, one of the use cases is machine learning. So what does that mean? Machine learning is a subset of artificial intelligence. And what machine learning does, it says, let me give you an example. When you use your calculator and you say 2 plus 2, it says 4. When you use your Excel, it says 2 plus 2 is equal to 4. And anybody in this world using Excel or calculator, it is not possible that someone will say, "Arey Baba, my Excel said 2 plus 2 is equal to 5. It is not possible. Why? Because all these calculations or these methods, they have been hard coded into calculator. They have been hard coded into Excel. They have been hard coded in your Tally, BZ, SAP, Oracle, Finacle, whichever software you are using currently, the financial system software. They all have these mathematical formulas hard-coded, and hence no problem. What machine learning does, it is different. In machine learning, the programmer said, I don't know mathematical formulas. You please learn from the Excel file or whatever file I will be uploading. And I will keep uploading that on real-time basis so that you keep learning. Now, you may say, Arey, Rajiv, that is better. Because if the software will learn from the Excel file, which is coming on real-time basis, it can learn a lot. Absolutely, yes, it can learn a lot. But it is learning from an Excel file, getting from a particular source, which we don't know is reliable or not. What if somebody in that Excel file has done a calculation that 2 plus 2 is equal to 10? That software has not been trained to say this is wrong. So if tomorrow when you are using that machine learning algorithm and you ask 2 plus 2, it will say 10 and not 4. Why? Because the Excel file from where it was learning, it gave the wrong calculation. And that is the reason machine learning cannot be 100% accurate. Its accuracy will always be dependent on the quality of data from where it is learning. Yeah. And that learning is happening real time. That data keeps coming. For example, okay, let me give this second example after 2 minutes. Yeah. So that is about machine learning. And what is RPA? See, RPA is very different from machine learning. RPA says, okay, any process or any task which is repeatable and is standard, it has to be done exactly same way every time. That process, if not today, tomorrow it will move to RPA. Because RPA says, please teach me once. And I will do exactly same thing in finite number of times. For example, brushing your teeth. So if you train a bot saying, I brush firstly 5 times like this, 5 times this, 5 times this, and then I am done, that can be hard-coded in a software. Obviously, then that software will get attached to connected to a hardware as well, so that it can hold your brush. And every time, then you just stand up in the washroom and it will do brush on your behalf. I mean, for your teeth only, it will do. Why it will be able to do? Because you taught the software every time this is how I do. 5, 5, 5, 15 times and I'm done. Similarly, when you call a customer care, whether it is Airtel, Vodafone, or any of your credit card company, when you dial their number, the very first hello which you receive, hear from them is not from a human being. It is from a RPA. Yeah. Because then it says, if you want this, dial 1, if you want that, dial 2, dial 9, 8, 7, whatever. And then you keep dialing. There is a voice which is there. It's a pre-recorded voice with specific set of instructions. It is not applying its mind. It's not applying its brain. It is not learning. Because the moment you keep pressing numbers here and there, it gives you an option saying, if you want to speak to a human being or whatever, customer care executives, press 9. Because why it gives you that option? Because the organization knows that since this is just a bot, you as a customer may have a problem which that company doesn't know right now. And to solve that new type of problem, which you as a customer have, then you can reach out to a human being. So that's how a bot, robotic process automation, is different from machine learning. Machine learning keeps learning real time. Bot learns only once. You tell the bot, this is how it has to be. Then you stop learning. No, not you. That bot stops learning and it starts executing till the time you disconnect that bot. All these three, they have different use cases. And that's how they complement each other wherever, depending on different organization, different needs. Yeah. Similarly, now today we don't have self-driving cars. If I talk about the one use case which is going to come very, very soon among us. Now, self-driving cars, they are getting built on machine learning, right? So different permutation combinations are being taught to that software. And I'm sure the amount of learning which has to be given to the cars in India are gonna too much. Because I'm sure in US and Europe, you cannot expect, dogs and cats, to come on your way. But in India, you can expect not only dogs and cats, but a lot of many more things to come on your way, which you may not be expecting. Yeah. And hence, I believe the quantity of data which will be taught to Indian self-driving cars is going to be too much. Still, there will be a scenario where something will happen in front of our self-driven cars, which it may not have been taught. So the risk of accidents will still be there. And that is why I say machine learning is not 100% accurate. But I believe it is going to be better than human judgment. Yeah. Because when you are driving, you may have 20 years of driving experience, but on the road next to you, or maybe ahead of you or behind you, there may be someone who just got his driving license, 18-year-old. His or her level of judgment may be very different than your level of judgment. But in case of self-driving cars, it is going to be standard. It may be 99%, it may be 95%. But I believe may be better than or safer than human beings. But that's a different debate we can have sometime later. But that's the technology. That's the that's the tool on which self-driving cars are getting built. Now you may say, Rajiv, then so what? Tesla is building those cars, and when they come to India, I will buy one of them. Why we are discussing this on Saturday evening? See, when these cars are not cars, when any solution is getting built on machine learning, there has to be someone who has to do testing of the coding also. Yeah, because the coding, there are two aspects in machine learning. Number one, the code. Number two, the data. And if you do some research, there are a lot of concerns, ethics related as well as safety related concerns, which are being raised by the experts on the quality of data which will be fed into these softwares. So today or tomorrow, the demand for data scientists is going to increase. Data scientists plus auditors, right? Those auditors who know data science as well, so that instead of just doing sample testing of 25, 35, 50 samples, tomorrow, when their company is launching a new functionality using machine learning algorithm, the same auditor can also do a white box testing instead of black box testing. Today, if you are not a data scientist, you can only do a black box testing. But organizations are not happy with that. They are saying, if you are doing black box testing, you may not be able to test all the scenarios. But if you do a white box testing, if you go inside and read the code, plus read the data which is being fed into the code, then you can give more and better insights to the organization that if the programmer has done something which he should not have done. That demand, ladies and gentlemen, is increasing. And it is going to increase. What is going to increase? The combination of a chartered accountant plus data scientist. It is going to increase. I myself, as a group head of, of e-com, one of the biggest e-commerce companies in India, I am now preferring, hiring those chartered accountants and MBAs who have who don't only have experience of Excel or ACL or IDEA, but they know they have done some sort of data science program as well. Now you may say, why? The only reason is when you learn Excel, ACL, IDEA, you learn the coding side of it, how to use pivot, how to use VLOOKUP and all those things. But you miss one very important part, which is machine learning. And in today's world, especially those organizations who are playing with big data, those organizations want you to use big data. They want you to use machine learning, and they want you to also audit machine learning. How are you going to audit if you had just played in Excel, IDEA, or ACL, or things like that? Those skills are not going to help you in the big data type of environment. Yeah. So that's how the world is changing around us. Similarly, recommendation engine. Yeah. I have put in only 4 examples, but I'm sure you know many more companies which are using recommendation engines. We use recommendation engine. Amazon, Groupers, which is Blinkit, Big Basket, everybody uses recommendation engine. What is that? It means, suppose Vikasji is searching for an Apple laptop, and he clicked on one of the laptop, and he is now looking at the specifications. What is the RAM, what is the hard disk, and warranty, and all those things, and he's scrolling. When he's scrolling, then he also find a section which says, customers like you also bought. Then double colon, then point number 1. It may show a laptop bag, yeah, which will be able to accommodate this particular laptop. Point number 2 may be a mouse, maybe an Apple mouse, maybe something else, some other brand, which goes with that laptop. Third, maybe, I don't know, maybe the keyboard cover, something like that. Now, when I was giving this session to the RBI officers, they said, Rajiv, these e-commerce companies must be giving those recommendations where the margins are highest. So the answer is no. The recommendation engine doesn't work that way. The recommendation engine is very simple. It keeps learning. It is machine learning based. And what it says, with the product you are searching, more than 50% of the customers who bought that product, in that same order, what else they bought, more than 50% of the times. Yeah. So for example, if there are 10 chartered accountants on this Zoom, 10 chartered accountants buy that same laptop. Now, since they have placed the order, Amazon on Flipkart knows that, okay, they have bought this laptop, as well as 6 of them bought the Apple branded laptop bag. 4 of them bought Dell company's laptop bag, even though the laptop is of Apple. Simple mathematics, since 6 out of 10 is more than 50%. Now, if Vikasji goes and is searching for the same laptop, in the recommendation, he will get the Apple laptop bag, which 6 out of 10 customers bought. Now, tomorrow that data may change. The next set of 10 customers, they may buy Dell laptop bag. And hence, if you take the average of 20 customers, 10 of yesterday, 10 of today. So 20 customers, if you take average, then the more than 50% actually bought Dell laptop bag. So if Vikasji is also checking tomorrow night, because he didn't purchase today, he looked at it, he closed the Amazon app. Tomorrow night, he is again checking. Tomorrow night, the recommendation engine will show him Dell laptop bag and not Apple laptop bag. So it is learning on real-time basis. It is accumulating the data so that what is the right product which can make the shopping experience better and faster for the customer, that can be provided to the customers. Now, again, you may say, Rajiv, so that's a business functionality. What is in it for me? What is in it for us is we as auditors, we are supposed to check whether the company has put in a logic which it should not be putting. For example, what the RBI officer asked me, has the company put in a logic that particular laptop bag where I have the highest margin, even though the customer don't like that product, whichever laptop bag is giving me the highest margin, please recommend that. That is unethical. Yeah, that's something which the ethical organization doesn't want to do. So we as auditors, we have to make sure that those logics are not going into it. Yeah. How you will be able to do unless we know how the machine learning works. And that is where, as I said, the demand is slowly increasing. Today, we are more dependent on third-party consultants, which is increasing our cost. And organizations are becoming cost conscious, and you would have already seen. Yeah, and at least for next year and a half, the expectation is, because the recession is coming here, there, and all those places, company is gonna say that whichsoever auditor I am hiring, let's see how much capable they are, so that we can reduce the consultant's cost. That's where the world is moving. Now you may say it's a short-term part. Short-term, yes, but once the organization tastes that yes, those chartered accountants who are data scientists also, they are better because they are able to do better discussions with us. So even if the recession is gone, company is going to say, please hire more of those. Just like during COVID, we all got taste of hybrid work environment. So even though the COVID was gone till this last few days, we still wanted our organization to give us the hybrid work environment because we felt, "Arey Baba, this is very comfortable." Yeah. So that's where the world is moving. Now, another fraud which is picking, the new type of fraud which is picking up pace, and there is one very fundamental reason why it is picking up pace, and that one is account takeover fraud. It's a technical term. In layman language, it means identity theft, your virtual identity theft. Very simple, no rocket science in that. Which essentially means that if whatever is the credentials of, say, Nandaji, ID and password on a particular website, if somebody else gets to know of that ID as well as password, so that is identity theft, that is account takeover. Now you may say, "Arey, if it is identity theft, it is a very old thing. Why we are talking about it now?" We are talking about it now because I want to connect it with credential stuffing. It is becoming very, very big risk for you as an individual, for you as a professional, and for you as a parent also. So from 3 different angles, it is becoming very important that you understand how identity theft is connected with credential stuffing. Let me explain that with an example. In last 2 years, there are many new small startups have come, especially in the education sector. And what they have done, they have democratized the learning. And I love some of them because I learned a lot from many of these small edutech startups, because I learned a lot from them in 400 rupees, 350 rupees, 500 rupees. So I purchased many courses. My daughter purchased many courses. We learned from some courses maybe 50%, from some 20%, but I learned more than the value I paid. Yeah, value means the money I paid. So I'm very happy because if I paid them 350 rupees, I know I learned maybe worth 50,000 or 1 lakh rupees or maybe more. Now, so far, so good. But the problem is, since many of them are very, very small organizations, their budget for everything is small. For everything. And when I say everything, it includes information security also, cyber security also. Yeah. Cybersecurity can never be their number 1 priority. Please let us be on the same page. Let us not be in a hypothetical world. Their number 1 priority is to hire talent give them good money so that they can join them. That's where they have to spend more, not really on the cyber part. Now, what happens when the attackers, when they want to have Nandaji's bank accounts ID and password? They know Nandaji may be having an account with SBI, maybe with ICI, maybe HDFC, and these are very, very big banks with very big budget for everything, including cyber security. So the hackers know attacking these big banks is not easy. So what they do? They attack these small startups. So, and they are getting successful more often than not. You can Google it. Now, when they are successful, they are able to get the ID and password of that edutech company, of the users of edutech company, including Nandaji also. Now, you may say, okay, no problem that if Nandaji had purchased 2 courses, that hacker would be able to learn those 2 courses free of cost on Nandaji's account, correct? Na? Because he hacked into what? That educational website's ID and password. No, that is not his intention. His intention is to misuse one of the human psychological problem or human mental capability limitation problem. We all have limitation of how many passwords we can remember. We all have, and we don't like creating different password for different website because Baba kaun yaad rakhega. And if I'm not able to remember, I have to write it on a paper. Now, if I write it on paper, it is much more risky. So what we do, what we end up doing is we end up keeping same or similar password for many of our IDs. Yeah. So what the hacker has to do, once he got these 5,000, 10,000, or maybe 50,000 customers ID and password of that edutech company, he will put all those IDs and password into a text file or a CSV file, and he will deploy a robot RPA to start putting those IDs and passwords on State Bank of India website, ICICI bank site, HDFC, Federal Bank, IDFC, whatever bank name. And then Nandaji may also have a bank account, maybe in US, I don't know. So that website also, anyways, no human being has to work on it. Now it's a bot. So bot ko, they feed all the website name and they say, try this combination of ID and password on all the banking websites. And they are waiting for one hit. Now Nandaji may not have done that. Maybe Vikasji may have done that, of keeping their Federal Bank's password as well as their edutech password same, or Rajiv Gupta may have done that. They are just waiting for one customer who may have done. And unfortunately, their success rate is very high. It is not one, there are many customers who end up doing it. I myself was doing that. And I'm not ashamed of sharing that with you, because I'm also a human being. Before I learned about this fraud, for many of my bank accounts, the passwords were similar to many of my other websites, which were non-financial. So I changed them immediately, because that is how credential stuffing is done to do identity fraud. Now, what is the learning for us? This learning has to be used in 3 places. Number 1, for you as an individual, for you as a professional, so that you create a awareness program within your organization. Especially with your treasury team, especially with your accounts payable team, because they are the ones who initiate a lot of, money in and money out. Okay? So, including your payroll teams. At least these 3 teams have to be sanitized immediately, as well as your family, because it's not only you and me who are using online banking and other things. Our spouses are using. Our kids, who are, adult, maybe 15-year-old or maybe 18-year-old, whatnot, would be having own individual, their own bank accounts as well. So it's very important, at least tonight, you please sanitize your family. And tomorrow is Sunday. So maybe next week, sanitize your organization as well. How this simple human weakness can be misused to commit big fraud. And this is getting committed. I'll give you an example. If you see the 3rd bullet on my screen, there was a research which was done on Indian customers. And it says many Indian users are still using password which they used in 2014 for a brand which had a data leakage, data breach at that time. So that company had also announced in 2014 that, oh, my servers had got hacked and 50,000 or 5 lakh customers ID and password got leaked. But people were not able to connect ki, Are Baba, meri is brand ka, that brand may be Nike, maybe Adidas, or maybe some other. Us website ka if ID and password has got hacked, how it can be misused for my banking systems as well. So 8-year-old passwords are also getting used. And that is what, when this company did, what we call as ethical hacking, they found. Yeah. So that's how we as human beings, we operate, and carries a big risk in the current world where weakness of some other organization or some other industry is getting misused to commit fraud on all of us. Yeah. How we are doing on time? Okay, very good. Cyber security. Let me move on. So let me move on. Yeah? So with all these recent uses of technology, or the whatever these emerging technologies which are coming up, one thing which I wanted to share with all of you, that some of us, when especially I go into the physical world, conferences, I hear some of the senior chartered accountants, saying, Rajiv, whatever you are saying sounds good, but we have an option, right? We have an option. And they say, Rajiv, we have an option to adopt or not to adopt, because our practice of tax, our practice of audit, all these things are going well. Yeah. And some say, so, younger generation should learn, and no need for us to really learn. It's an option for us. Yeah. And we have an option to audit e-commerce companies or new age companies, or we have an option to continue, auditing the brick and mortar organization, because as you said, those brick and mortar organizations are not going anywhere. Absolutely right. They are not going anywhere. But my view on you all having an option is a bit different, and it comes with a caveat. And that caveat is why we as chartered accountants have a premium versus a BCom, because a BCom or a CS or a CWA can also do an audit. Yeah. Why we as chartered accountants, we carry premium? Because of the brand we carry as chartered accountants, because anybody who see that we are chartered accountant, they know we have gone through rigorous learning and training process. And that is where we carry a premium. Similarly, ladies and gentlemen, emerging technologies, they carry premium. When you bought a new mobile phone, maybe around 20 years ago, that time, I remember the outgoing was, I think for 1 second, you had to pay 5 rupees or something. And even incoming outgoing 20 rupees something, and incoming was also chargeable 5 rupees a minute or a second. I don't remember that, but everything was chargeable. Now I make so many outgoing calls, my bill is still less than 1,000 rupees. That time it used to depend upon how many countries I am traveling, maybe 5,000, 10,000, 20,000. Emerging technology. That time, those mobile phone as a technology was emerging, and hence it was carrying a premium. And then it became a commodity. So the moment something becomes commodity, the premium goes away. And why I am saying so? Because there is no newness, no value, no much value add left in what we can do in brick and mortar organization as auditors. We have to accept that those have become part of our standard learning as chartered accountant. Yeah, there are many technical standards. You just open ICI.org. I have written one technical standard on beverage industry. So you can download, if you have no experience of auditing Pepsi, Coca-Cola, Bisleri, Johnny Walker, you just download that auditing standard. You follow that auditing standard for planning, risk assessment, and field work. You will be able to do that. So there is no premium left for auditing these standard organizations. The premium is if you say, I know how to audit Metaverse. There's a premium if you say, I know how to audit machine learning algorithms. So that's an option with you, that whether you want to settle for a traditional business where the premium is no longer there, and that's a fact. You may have a different opinion, but I know how the markets are moving. So that way, today the premium lies in the space of these emerging technologies, and where the premium is going. So this is a screenshot I have from Future of Jobs report published by World Economic Forum. So I have given the link at the bottom. It's available free of cost. I recommend all of you to read it. It is full of charts, so it's very light reading, and this chart is from there. What you see on the right hand side, it says, and this is doing prediction of 2025. Yeah, it's saying consistently the demand for the experts of accounting, bookkeeping, payroll, accountants, auditors, financial analysts, and whatnot. This all is decreasing, and the demand for what is increasing? Data analysts, data scientists, big data specialists. And what I have highlighted on the left hand side in green, if you see, we as chartered accountants, we have fundamental advantage to be an expert data analyst. We have fundamental advantage to be big data specialist, because who knows playing with data and numbers better than us as chartered accountants? It's just a matter of fact that we have to go beyond being a chartered accountant and say, okay, now let's use that as a fundamental knowledge which I carry and the brand I carry, and how I build myself for 2025. And that is where the world is moving. Now, quick point on why the skill set on the right-hand side, why their demand is increasing: because of robotic process automation. Only one reason. Today, let me give you my own example. Financial analysts, stock brokers. Few years ago, I was a big-time customer of IIFL, India Infoline. And there was a relationship manager. She used to call me almost every day, Rajiv, do this, do that. Don't do this, don't do that. Every day morning, she used to call. Now, 99% of the times, I disconnect her call. Why? Because now I am using I&D money, grow, few more. Because they are giving me the real-time information whenever I have time, not when they have time. They are giving me information when the market is getting close. Whether I read it sitting in washroom or when I'm driving, that's my problem. But I have the discretion now to get this information when I am ready. So all these apps, what they are doing, they are moving all these things to robots. And they are saying, let us undo the human part and let's move anything, as I said, in case of bot, anything which is standardized. For example, Nifty, aaj kitne pe close hua? What's the value at a human being tell? No, Nifty kitne pe close hua? It is a published number. So we don't need a human being to tell that number to another human being. कौन सा Nifty 50 का stock up गया, down गया, 5% up, 5% down, all these things are published number getting reported by NSE and BSE in a standard format. Every day, every minute, there is no change in how they do that. And that is where robots are coming in. That is why these new age, financial analysts, which are bot driven, they are doing better. And if you even do survey of the new age chartered accountants, I'm 100% sure that most of them would be preferring these new age bot driven stock analysts versus the traditional ones. That is the reason. The job of a bookkeeper is very much standardized. That is why so many new softwares are also coming, Khata book and so many different things are coming up. That is the reason. So with that, let me quickly, in the interest of time, come to the last slide. Now, if all these things are changing, how I see the potential scope of the audits in future, I think the organizations would be least interested in your 25 samples or 50 samples of, the reverse tick, which I actually got trained on. Yeah. When I became chartered accountant. No organizations today. No. Few organizations today are interested. Tomorrow, no organization would be interested in that sample testing. Everybody would be interested in 100% testing. It is possible. Data is there. Data science tools are there. Chartered accountants are there. It's only a matter of fact that you all have to be ready so that instead of sample testing, you move to the 100% testing. And organizations are moving to cloud. So are you equipped to audit the security risk in the cloud? Organizations are moving to 3D printing. Do you know, or are you able to find out risks in that, in the 3D printing? Can you find out risk in IoT, Internet of Things? So suppose today, sitting, when you're starting from your own office, you want to go home, it's summers, May in Delhi. And since you and your spouse both are working, ghar would be locked. When you reach home, it will be burning. Not burning. It will be like very hot. So firstly, you have to turn on the AC when you reach home, and then you keep all your windows and doors open for a few minutes. Today, the smart ACs are there, which you can turn on, sitting in the office only. Now, someone has to audit that the quality of the coding which is done for turning on the AC, it is good enough, because it should not so happen that the AC gets burnt. And when you reach home, there's no home. That's a worst case scenario. But someone has to make sure that the quality of coding, the quality of program which is getting there is having all the safety aspects as well. So that's how I see the organizations are going to focus more on the risks in the new age technology, and how you as auditors are giving them assurance that, Baba, everything is fine. Whatever new technology you have implemented, I have looked into the risk, and those risks are being taken care, and adequate controls have been implemented. So that's it. That's all from my side, and that's a quote which I published some time back, and I keep sharing. That's a quote from Peter Drucker, that the only skill that will be important in 21st century is the skill of learning new skills. If any one of us feel that chartered accountant बड़ी मुश्किल से किया है, 3 साल लगे, 5 साल लगे, 10 साल लगे, बहुत हो गया. Sorry, the world has changed. Every 3 to 5 years, you have to keep upskilling. 3 to 5 तो मैं काफी outer limit बोल रहा हूँ, but just so that you don't get discouraged. 3 to 5 years, you have to keep upskilling, and that's a reality. So with that, thank you so much. Back to you, Vikas ji.
Thank you, Rajiv sir. It was very insightful and eye opener for all of us. And as you already said the trend, look ahead. We are entering into a virtual world. We need to change, because the change is only consistent. If we don't change, we will be redundant at some point of time. So next technical session is on fraud and internal audit and global trends. It will be led by Archana ma'am. Archana ma'am. Archana ma'am is an experienced chartered accountant with the qualification of CISA, DISA, and IFRS. Archana ma'am is an internal audit, risk, fraud detection, investigation professional with the experience of more than 20 years, various industries. Her experience has mostly been in reputed multinational organizations like HP, Oracle, Financial Services, BSC, SDFC Bank, ICICI Bank, Axis Bank. She has worked on various process improvements and contributed actively to robotics, process automation. She is an active speaker at various seminars, conclaves organized by ICI and WIRC. Ma'am, now the ball in your court. So let's begin with the technical session.
Thank you, Vikas ji, for your kind words. First of all, thank you to Charanjot Singh Nanda ji for giving me this opportunity to present my views on the trends in internal audit and fraud detection. So to begin with, I would like to thank Rajiv ji also for the exciting session which we just listened to. And truly speaking, synthetic identities and synthetic frauds are global trends, and appropriate measures need to be taken to ensure that these kind of frauds are contained. Okay. So, as rightly said by Mr. Rajiv ji, that today is an age of technology, and we need to embrace the technology. we do not have the option of not going that way. So we set our eyes and dreams on the sky, and also have our feet right there on the ground. With this in this backdrop, I would like to take this technical session and help all of us learn together. I will just share my screen. Just give me a minute. Yeah. Is my screen visible?
Not yet, ma'am.
Okay. Is it visible now?
Yes, ma'am.
Okay, thank you. Yeah. So today's session is about internal audit and fraud detection, global trends. And I have done a lot of research work over here on the latest trends and latest judgments which have come in the past few days. So I would be covering those judgments over here. Yeah. First of all, I would like to give this disclaimer that this presentation is only for informational purposes and it does not constitute legal or professional advice. And the views expressed in this presentation are my personal views, and they do not represent the views of my employer or any other authority. Yeah. So this is the agenda and the backdrop for today's meeting. First is the recent judgment and developments, then important aspects and excerpts from the judgment. The critical aspects, here I am just covering the basics of internal audit, what should have been done, what was not done, kind of learning from those mistakes, root cause analysis, what are the basics, control effectiveness. So we are just going to peep into the basics over here. And the regulatory environment and the call to action, what needs to be done. Okay, so there was a recent judgment in December this year as we close on 2022 and start with 2023. So a case study approach is the approach that I have taken, and I would like to present this approach to you to make it more practical. So there were recent actions by an administrative law judge for the US Office of the Comptroller of Currency, OCC as they call it. Okay. Now, why is this relevant for us? Okay, because this is something which is a global authority, and we should always take cues from global regulatory bodies. Okay. Now, this judge has recommended stiff penalties against former Wells Fargo executives, which includes the chief risk officer, chief audit executive, mind you, and the internal audit director. And what has he recommended that these penalties for? It is something as simple as sales misconduct at the bank. Okay. Now, the CAE is being slapped with a fine of about $7 million, and the audit director is fined with $1.5 million, which is a huge amount. Okay. At no point of time earlier, such a humongous amount has been fined and penalties imposed. Now, what is this fine for? Okay. The fine is something for, root cause analysis. The fine is something that the audit has failed to identify the root cause of the issue. And what is the issue? The issue is sales misconduct. And ethical misconduct by the sales team in the bank. Secondly, the fine is for the credible challenge when evaluating the effectiveness of the risk management controls. So control effectiveness is something which is audit's purview, and not evaluating the controls is a big deficit over here. And the third point is composed of multiple issues. If you read it carefully, which I have highlighted in color, third point is to identify control failures, address control failures, and escalate risk management control failures. So it's not only that the audit over here has not identified, it had the knowledge, but it has not addressed the issue. And it did not address the issue. And thirdly, it has not even escalated it to the board or the management bodies. Now, what exactly is the Office of Comptroller of the Currency? Now, this is a US body. Okay. This is an independent bureau of the US Department of Treasury. Now, the OCC charters regulates and supervises all the national banks, savings associations, and federal branches and agencies of foreign banks. Now, OCC, this regulatory body, it is supposed to ensure that the banks they supervise are operating in a safe environment, sound manner. They are fair to the customers. They are fairly providing access to financial services, treating customers fairly, and complying with the applicable laws and regulations. Okay. So here, something like a matter of privacy or personally identifiable information also will be crucial part over here. Now, let us all examine this in detail as to what was the exact issue. So we start with where it all started. Okay. So it all started with a news article in Los Angeles Times. And this article was dated as far back as 2013. Okay. There was an article which flashed in October 3rd, 2013. And what it said was that Wells Fargo accuses workers of opening fake accounts to meet the goals. So it's the sales pressures, numbers, and cutthroat competition among the corporate world, which you can identify over here, would have triggered this particular aspect. And if that was not enough, on 21st of October, there was another article which said Wells Fargo pressure cooker sales culture comes at a cost. So basically it said that all the sales staff were working in a kind of a pressure cooker situation wherein the management was continuously pressurizing them to increase the numbers, and they had but no choice, to do whatever they have done. Okay. But unfortunately, internal audit has to bear the brunt of it. So we will examine what audit could have done, although it is easier said than doing it, but still we will try and learn from it, because independence is an aspect which is very, very critical and at the same time very, very difficult in today's corporate world. So this is what the news article said. They put their own addresses on the accounts, so he wouldn't know about it. So the account is a customer's account. Okay, say ABCD, say Mr. Vikas has his customer account, but address of Vikas is not actual address of Vikas. It's someone else's address, which would actually be the sales staff address. Okay, now why would he do that? Because it's a fake account. Okay, the credentials, maybe the PAN number, Aadhaar number, and these aspects would belong to Mr. Vikas. But the address is the sales executive. So The telephone number is the sales executives. So Mr. Vikas would never come to know that an account is opened in his name in Wells Fargo Bank. So how did he come to know finally? It showed up on his credit report. So there are these bureau reports, Experience, Sibyl. So in this bureau reports, he found that he had an account in Wells Fargo Bank also. So, and it's not one, there are 6 different accounts. How has this happened? And address is totally different address. Another thing observed is the sales staff would just tell the customers, you are getting a credit card. You are eligible for a credit card. Okay. And then an unneeded credit card account was opened, even though customer didn't know it and customer didn't want it. You're all privy to such kind of calls and continuous pestering by sales executives to open credit cards. This is one of the important aspects. So when the customer complained about the credit card, the branch manager would say, oh, it's just a computer glitch. Okay, sorry. The card has been requested by someone else. It got erroneously opened in your account. But the damage is done. He has achieved his numbers. Right? So there is a fraud over here. Next is, I've had a 6-line figure of credit with Wells for 7 years. One of the customers said that he had a line of credit already against Wells Fargo Bank. And now another line of credit has been opened. And what surprising thing was his date of birth, social security, and all these things have been used. So at least one employee forged his signature, because without that, he wouldn't have achieved it. So in today's world, I mean, this was way back in 2013, right? When there were manual applications forms. And now when we are moving to a digital and a mobile-based platforms, this is all the more critical, because your mobile, if someone is gaining control of your mobile and applying through that, it would be possible definitely to take and use the credentials of that person. That's why they always say that don't use this internet facility as public places for the security purposes. The manager every morning, or the team leader, would greet the staff with a quota. So he would start with, okay, yeah, you have to achieve so and so many accounts opened during the day. If you fail, then you sit late, or you beg your friends and families to open accounts. When asked how to do it, he would come and say, I don't care how you do it. You do it or you're not going home. He said branch and district managers told him to falsify the phone numbers. So what he has done over here, instead of giving the phone numbers of the customers, he has given his own or other phone numbers so that they couldn't be reached for the bank's satisfaction surveys. So if the phone number is incorrect, the satisfaction survey call goes to the sales executive and he gives a good survey for the phone number on the phone calls. Employees would often open premium checking accounts. This is another important aspect. Premium checking accounts are open for immigrants, enabling them to send money across the border. Now, these accounts could be opened with just $50, but customers were supposed to have at least $25,000 on the deposits at Wells Fargo, or they have to pay a monthly charge, $30. Now, how have the sales people averted this? How have they managed this? So to get around these requirements and keep earning credit, employees would downgrade the original accounts and open new premium accounts. So before the fees kicked in of $30, because there wasn't any transaction, it was a fake account, he downgraded it and opened a premium account. So the premium account, would waive off the fees, and it would still look like the salesperson had achieved good numbers of sales. The customer, surprised by the unrequested credit line, said she went to complain at the branch where the account was opened. And the manager told, oh, this was one of the best employees. How come he's the best? Because he has achieved good numbers. Okay. And the customer left, oh, if this is your best, then the bank is in trouble. So there are various types of integrity issues observed in the bank. First is customer consent. Customer consent is a very, very important aspect in banking today. Okay. It not only involves sharing of information, but also consent for booking the sale, cross-sale. All these are very important aspects. And here I would also like to point out about the data quality. When the application forms get filled, many times you see the salesperson will come and say, oh, you don't fill anything. I'll fill everything for you. Okay. And he fills out and sorry. And we may not even know whether he has ticked that small checkbox of customer consent and would have given consent for sharing the information, for sending him emailers, whatnot. So allegations of the booking or sale of banking product without knowledge or official direct consent of the customer. Oh, this is a gross violation in banking. Second is false entries violation. So false identification, false expiration date, false information given to open the accounts. So this includes all kind of fictitious accounts also. Third is fictitious customers. Now here, hopping on what Rajiv ji said about the synthetic identity, it is something where customers' data is merged and a new identity itself is created and a fictitious customer is generated. Okay. This includes falsified identification, social security number, and the true identity of the account holder is never known. It is very common to have common names like Suresh, Ramesh, or those kind of names, and there will be hundreds and thousands of persons who would have such kind of names. Common date of births. Okay. Obviously, the PAN number would be different, but fictitious customer would use that information, and the sales would be the culprit over here. Fourth is online banking. Now here, online banking, if the particular sales executive achieved and prompted the customer to open an online banking account or activating a debit card, then he used to get a commission. So pinning online banking with or without customer consent and activating his online banking. And if phone number is incorrect in that, obviously the customer doesn't know he has an online banking. It is used by someone else. Product manipulation. Waiving the fees. So earlier account was opened with a zero balance, and then subsequently the customer was supposed to do a transaction within 3 months and he did not do it. So what the salesperson has gone and done, he has waived the fees or he has changed the product subsequently to achieve this target, product manipulation. Third is funding manipulation. So what is funding manipulation? So here, this includes stimulated funding. So allegations of team members funding new or existing accounts. So there would be a rotation of funds between the team members, or simulated funding would be done by the employee himself, and the account would look good and a real account. Seventh is reassignment of sales credits. So allegation of one team member making referral contacts or product sales and reassigning the credit to another team member. He has to complete his target. One team member, the target was 10, he has already achieved 11. And he has got a few customers. So he refers it to his friend and both enjoy the commission. Next is referrals. So invalid sales referrals, again by directing traffic or inappropriately received by another team member when an actual sales referral was not made. So actually, the customer has come directly to the bank, but the employee directed him to an agent. The agent gets the commission, and the employee earns or shares the commission with the agent. So this is a big malpractice. Now I take you to the important excerpts from the judgment. So let us study in depth what exactly was the judgment and what exactly was the modus operandi. So the bank's sales goals and management pressure led thousands of employees to do some malpractice. What was that? Unlawful conduct to attain sales through fraud, identity theft, and falsification of bank records. So one is going against the law, and second is ethics. Unethical practices to sell products of no or low value to bank customers. The customer doesn't need that product, but a target is given that you have to cross-sell minimum of 8 products of the organization, while believing that the customer did not actually need the product. The sales manager knows, customer knows he doesn't need the product, but to achieve the target, he is resorting to unethical practices and convincing the customer that he needs the product. Collectively, many of these practices are referred to within the bank, Wells Fargo, as gaming. So this is something which has been defined in the books of the bank. So gaming was a term known at the bank. It was referred to employees' manipulation or misrepresentation of sales to meet the sales goal, receive incentive, compensation, or avoid negative consequences such as reprimands or termination. So the employee was told, unless you make a sale, you can't go home. Okay. He gives his friend's number, opens an account, a zero balance account, completes his target. After 3 months, converts it or closes the account. This is something called as gaming. Now, examples of gaming. Employees created false records and forged customer signatures on account opening documents. So this is a very, very big kind of fraudulent activity of forging the customer's signature. Customer forget the consent. Customer has not even signed the application form. Second is opening debit cards using customers' personal information without consent. Falsely created PIN to activate the unauthorized debit card. He created a PIN, activated the debit card, falsely created a debit card, and the employees did it because they were rewarded for opening online banking profiles, which required a debit card. Okay, this sales employee has achieved not only accounting numbers, but also he has ensured that debit card has been opened for so many of the customers. So in a practice known as simulated funding. So what is simulated funding? I have highlighted this word so that you can grasp this. Simulated funding, employees created false records by opening unauthorized checking, that is savings account, to hit the sales goal. They then transferred it to the unauthorized account to meet the funding criteria required to receive credit for selling the new account. Okay, so that it was a criteria or a target that fine, if you have opened an account, it is fine, but you will get commission for it only when there is funds in the account. So fine, you have opened a zero balance account. When are the funds coming? Coming through simulated funding. Employees moved funds from existing accounts of the customers without their consent. So single customer already has a savings account. You opened another savings account, moved funds from here to there. You got the credit, got the commission, moved it back. Very, very surprising and shocking revelation. Employees opened unauthorized credit cards, just like debit cards. Similarly, credit cards also opened in unauthorized manner. So whatever products are available, all they have exhausted. Employees opened bill pay products without customer authorization. Employees encouraged customers to make test or token payments from their bill pay accounts to obtain sales credits. So they were asked to make a token payment. So, and there are many practices, wherein if they make a payment or a bill payment of your utility bills, then it can be confirmed that the account is real. So even that was not left, and even that particular aspect was killed by the sales. Employees altered the phone numbers, email addresses, physical addresses, and in several instances, they prevented customers from knowing that this particular aspect, they have taken control of the customers. So customers are never knowing. And when it comes to satisfaction surveys, even those are manipulated. So how have they done this? A is false email addresses and B is funding. So millions of customers reflected a Wells Fargo email address as the customer's own personal email address. So coming back to how internal audit could have identified using data analytics. Okay. So if you have data of the email addresses of all the new accounts opened, and you do a search on how many are same email addresses during the period. So let's say you have a 10,000 accounts open, and out of that 7,000, they have the same or common email address, then it is a kind of a red flag. Whether the phone numbers are entered correctly, how many are duplicate phone numbers? 1,000 accounts are having same phone number. Okay. A particular executive, whatever accounts he has opened, all those accounts are having same phone number, same email address. It is a red flag. Employee address and customer address is same. Employee email address and customer email address is same in the database. So these are the kind of data analytics, which audit is expected to do and come out with the observations in this new age and new era. Gone are the days where we will be going with paper and pencil and marking a tick. It is playing with data. Second is millions of funding accounts reflected transfer of funds between two accounts that were equal in amount. So debit, credit. Okay. Pehle debit aaya, same amount se credit aaya. Other way around. Pehle credit aaya, same amount se debit aaya. Many of these accounts were subject to simulated funding. Employees use their own funds. This is gross negligence on the part of the employees. They used own funds to fund the customer account and used it without the customer knowing. So where did audit go wrong? Okay. So here I have taken experts from the judgment of OCC, Office of the Comptroller of Currency. So what the CAE, Chief Audit Executive, and the Audit Director have testified that these reporting requirements, it was alleged that the audit has not pointed out these requirements. Okay. So why have they not pointed out? The respondent in this case, his argument was that he did not bear a responsibility as an auditor, escalate an issue if the business unit was escalating it. So now the first line of defense is aware that there is an issue, but auditor is saying, fine, first line of defense knows, so why should I again report the same thing? Now this is, I believe, such kind of issues should be still included in the audit report as self-identified issues. And the audit rating should be given on that, because unless and until the corrective actions are taken, this should be still included in the audit report and tracked for closure. So here the CAE disavowed any duty to escalate the known issues to the audit committee or the management committee. And this constituted unsafe or unsound banking practices and breach of fiduciary duties of the auditor. Examination of suspected fraud. So going way back to October 2013, where it was suspected and the news article had stated that there is something wrong in the sales account opening. Going back to that, so it was a suspected fraud, it was a red flag, it was a trigger. But this particular aspect was not examined properly in the audit reports. So even if the investigation is not complete, it is a duty of the auditor to identify suspected frauds and comment on the effectiveness of the controls for such kind of fraudulent activities, even though it has not been concluded. He should opine on this. Next is the audit rating. There were repeated red flags. And what has the auditor done? He has rated the audit report as satisfactory. He has rated it effective. So despite knowing everything being in public domain, and he has said that, okay, fine, first line of defense is already reporting it. So fine, these risks exist. So audit report is satisfactory. So here the mistake is he has not identified the root cause, not placed effective controls, and given an audit rating of satisfactory. So independence is very important over here. Remedial action. Now, with all these issues cropping up, what has audit done for the remedial action? What audit has done is it has said, oh, fine, these issues are there. Then please do a training for the sales officers. Once training is done, second time training is done, but there are no metrics available on repetitive instances. Who are the salespeople who are repeating such instances? In 1 month, it is found whether a warning has been issued or just training has been conducted. So there should be a kind of matrix of malpractices wherein action can be taken. Failure to escalate. So here again, the auditor should have been bold enough to escalate the issue and put it to the board of directors. Auditor's responsibility to identify the root cause of the issue and control effectiveness, everything should have been escalated to the bank's board. That would have ensured that he has done his duty. So the auditor, Wells Fargo Audit Security, was not required to identify the root cause because identifying the root cause would not be consistent with the audit security's responsibilities. This is the contention which he has given. Internal audit believed that a business unit identified an issue, then it was the responsibility of the business unit. But he cannot forego the responsibility as a third line of defense. It is his duty to ensure the compliance tracking and the action taken report. Another part was, surprisingly, there was a fraud risk committee in place and the internal audit team was a part of the fraud risk committee. Now, there was a definition in the policy of the bank about fraud risk committee. Now, fraud was a deliberate misrepresentation may cause another person or entity to suffer damages, usually monetary loss. Misrepresentation was false or misleading representation or concealment. So both of these activities were done. Again, in this, there were two aspects. One is internal fraud and second is the identity fraud. So internal fraud, in which suspected or known fraud operator is a team member. Basically, the employees themselves were conducting this kind of fraud. It's not the customer who is responsible. And the true name or the identity fraud that occurred when an individual misrepresented his identity. So this is a kind of an external fraud when the customer is coming and doing fraud. By using identifying information, that was the valid identity of another real customer. A team member representing his or her identity by using a customer's information. So here there's a collaboration between the employee and the customer, and a true name fraud has been created. So coming back to the things that we can take from it, I would like to quote Henry Ford over here. So the only real mistake is the one from which we learn nothing. So such kind of judgments I think we must all study such judgments and identify, okay, where has it gone wrong? What one can improve in his conduct in the internal audit profession. Now let's take a quick look at the regulations. So post the Satyam fraud in 2009, the SEBI Committee on Disclosures and Accounting Standards advised SEBI on matters relating to disclosures. And it has said that, internal auditor loses his independence. So the internal audit should be committed by an external audit firm. And now, having said that, they again came and opined that considering the large size of listed companies, it is not convenient to have external auditors, and it's better to have internal auditors in-house. And it opened up to the public for the mandate and their views on whether it should be carried out by an external audit firm or by in-house internal auditors. Let's take a look at the Companies Act. So the Companies Act specifies that the whistleblower complaints, they were raised, how they were raised, how due diligence was done, and how they were addressed has to be looked into by the statutory auditors. And it is mandatory for companies to share all the complaints with the internal audit committee. So again, this brings the internal auditor into the purview to examine those complaints. What are the complaints? Are they indicating any kind of lacunae? Has it been addressed? The next regulation is obviously the most important one, and the RBI regulations. So RBI regulations call for risk-based internal audit in banks and NBFCs. While their circulars in Feb 2021 and Jan 2021. So here they have clearly mentioned that a head of internal audit is mandatory to be appointed in the bank or the NBFC. And he should have an independent reporting to the board of directors. Well, it's very easy to point fingers and do a hindsighting of it. But it is also weighing down on the internal audit profession. So what is the lesson we learned, or what is a call to action for the internal auditors or the statutory authorities, or how should the audit profession take it up with the statutory authorities? So if internal audit is expected to be independent, do we have the safeguards and protections in place? So let's say the management weighs in and asks the internal auditor to not rate it, needs improvement, not give the rating as needs improvement or unsatisfactory. He asks them to put it as satisfactory. And the auditor defies it and exercises an independent judgment. And the board and the management weighs. What is the option do the internal auditor have? Does he have the safeguard to protect himself? Does he have the backing of the regulatory authorities in such cases? Or is there a conflict of interest? So it is time to expand the statutes and the whistleblower statutes and the protection which is extended to whistleblowers also to the internal auditors. Only then it can ensure independence. Thirdly, management and boards do not enable or even permit that kind of scrutiny. They will not allow an unsatisfactory report is going to the board of directors or audit committee. So it is a challenge to express independence over here, and that is something which the internal auditor must attain, but adequate safeguards are missing for the regulation point of view. With this, I complete my presentation, and once again, thank you for giving me this opportunity. Vikas ji, over to you.
Thank you, Archana ma'am. And best selected example, there is an documentary on this case also is there. So okay. where the incentives and targets are there are most probabilities there that fraud is happening. So Indian private banks also must be facing these issues. Next technical session we have on risk-based auditing, presented by Bharat Garg sir, CA Bharat Garg sir, Head of Audit, Fidelity International, India. Bharat sir is a CA, CS with around 2 decades of experience in internal audit process and compliance reviews, investigation, operational risk management, and revenue assurance. He is also certified internal auditor and currently pursuing a CISA certification. His exposure spans across all the 3 sectors, consulting, private, and public. Previously, he has worked in reputed organizations like Deloitte, PwC, Vodafone, RBS, etc., and have got diverse exposure in multiple industries like BFSI, telecom, manufacturing, and FMCG. I will request Bharat sir, please, you can take this session further.
Okay. Thanks, CA Vikasji, and good evening, everyone. Hope everyone is keeping safe and sound. And it's really great to see, such a large numbers and, people gathering in the holiday season, particularly on the Christmas Eve. So that speaks a lot about our zeal to learn and our continuous strives for improvement. So I also take this opportunity to thank Badogar branch, the CA Prashant, Internal Audit Standard Board of ICAI, our organizing team, Arunji, Aartiji, Shivaniji, and last but not the least, CGF Nandaji, for giving me an excellent opportunity to share my insights and perspectives with all of you. My today's topic is risk-based auditing. Let me share my presentation. Because it's visible, right?
Yes, it's clearly visible, sir.
Okay. So the presentation will be divided into 3 broad aspects. We will be starting with the background, a brief about risk-based auditing concepts, benefits, and how do we prepare the risk-based audit plan, and it will be followed by a practical example. Before we start talking about risk-based internal auditing, let's have a look at the basic building blocks. So internal audit, and throughout the presentation, I have taken references from the ICAI standards on internal audit. So this is the definition of internal audit as per ICAI framework governing internal audits. Internal audit provides independent assurance on the effectiveness of internal controls and risk management processes to enhance governance and achieve organizational objectives. So herein few key things to be noted, I have underlined. One is independence. That's very, very important. Internal audit function should be independent, and that independence can be achieved either via the reporting structure, organization structure, through the position of the chief internal auditor, and how that internal audit function is placed within the organization. These days, internal audit is not restricted to providing assurance, control assurance, but we also do a lot of advisory work as well. And in that scenario, it's imperative that the potential conflict of interest is being taken care of. Say, for example, in my organization, we do a lot of advisory work at the instance of management, various key transformation projects, change management projects. We get associated with the business at an early stage. The approach is, to get it a right first time approach rather than doing a post-mortem exercise once the project has gone live or, new application or tools have been implemented. But in that scenario, we make sure that all the potential conflicts of interest are being taken care of. We have a conflict of interest policy to make sure that the internal auditor who is on the job, he or she remains independent. Second is key factor within this is internal controls and risk management. Over it, in the initial stages of internal audit, the focus was more on control assurance, evaluating internal controls, compliance with laws, compliance with policies, procedures. But over a period of time, internal audit has come a long way. And now the focus is not restricted to internal controls only, but internal audit is also providing assurance on the risk management processes. That's the core fundamental difference, and which we'll be talking about in risk-based internal auditing in subsequent slides as well. And all of this is to enhance governance and achieve organizational objectives. So governance, quite generic in nature, that's the relationship between the organization and all of its stakeholders, its employees, vendors, customers, government agencies, and everyone. It also includes compliance to laws and regulations. Achieve organizational objectives, that's the key objective. For internal audit to make sure that there are no risk with respect to organizational objectives. Second aspect is risk. Again, taken reference from SIA 130 risk management, risk can be defined as the probability of a threat. So it's a probability. It has not materialized, because once it's materialized, it becomes a risk event. And if you read further, by occurrence of an event. So there is a probability that something may happen, and it may cause significant impact to the business operations and continuity, and finally, which could prevent the organization from achieving its goals and objectives. If you look at the risk definition by IIA or by COSO framework or by ISO 31000, you will see that broadly there are some minor deviations, but broadly they all say that risk is a function of impact and probability. Now, if you evaluate impact is something like what may go wrong. In both the definitions, there is a reference of organization objectives. So the impact is with respect to the organization objectives. What may go wrong to the organization objectives? And the impact may be bifurcated into high, medium, low, or whatever the organization may wish to define it. And impact may be both financial and non-financials. And I have given some examples in subsequent slide as well. So we'll go through it. The other aspect is likelihood. As to how frequently, or basically, what's the probability of occurrence of each of the inherent risk. So whatever risk has been identified as part of the risk assessment, how frequently they may happen, and in absence of any controls, of course. One interesting thing to talk about risk is that typically we all think of risk in a very negative connotation, but that may not always be true. Nowhere it says that, what could be the overall significant impact. It may be both positive and negative, though typically it's always, not always, but typically, it's more on the negative side, but it may be positive side as well. Like think of a scenario that because of some erroneous reasons, a trader oversold its positions or oversold its holdings on Tuesday, 3 days back, more than, what was the approved order. But because of financial meltdown, if he or she looks back the current position as of today, it would have resulted in an overall positive impact because markets have melted down in the last 3 days or not. So it's not necessary that the risk may always lead to a negative impact. There may be positive instances as well onto the risk. Okay. Another thing is, when we move to risk-based internal auditing, that risk assessment, it's the responsibility of management. Internal auditors also do a risk assessment, and we'll be, looking at the finer difference between the two. But in case our organization has got a 3 lines model, the risk assessment is the responsibility of first line. The second line is responsible for defining all the risk tools. And first line ensures that all of those risk tools are adhered to, and second line also provides an oversight. Third line, which is the internal audit, it's an independent function, and it makes sure that it provides control assurance, not only on the controls, but also over the overall risk management processes. And when a risk assessment is being done by the business, by second line, or, in case there is no 3 lines model, then the internal audit itself, then there are various other risk assessment criteria which may need to be looked at. Say, for example, controllability. So this is very, very straightforward. There may be certain risk areas which may be dependent on the organization, which is something the organization can take measures to fix it, and something which may sit outside the control of the organization. A very simple thing could be something pertaining to technology risk, something pertaining to operations. So those are something which organization can make efforts, and organization can fix those. But think of geopolitical risks like Russia and Ukraine war. That is something which sits outside the remit of the organization. Another could be like persistence. How long a risk situation can continue. Again, I take example of the current geopolitical situation, the Russia-Ukraine war. It may continue for long, and it may continue to have an impact on the organization objectives. Another example could be like post-COVID-19 scenario. We have been hearing a lot of news with respect to shortage of semiconductor chips, which is impacting IT hardware industry, which is impacting automobile industry, but maybe many other industries as well. So that also needs to be considered when a risk assessment is being done. Another thing could be like interdependence. There may be scenarios. There may be scenarios that there is one particular risk event, but it may lead to it may trigger a series of other risk events as well, and the overall outcome may be greater than the outcome of a individual risk event. Say, for example, in a few months back, you would have read a lot of news with respect to a low-cost airlines, which was in the news for all the wrong reasons. Because of these geopolitical situation, the oil prices rising up, there was a huge drag onto their liquidity and cash flows, and apparently that impacted their spends on maintenance and repair operations. And then we heard a lot of news with respect to mid-air incidents happening, regulators taking a call, regulator curtailing their flight schedules, and of course, the organization also lost potential customers' trust and confidence as well. So that was a trigger event. It was triggered by a geopolitical situation, but overall, the overall outcome was much, much larger. Then you may also look at aspects like frequency. How often the risk event may happen. Say, for example, again, a geopolitical situation like Russia-Ukraine war, or it may be, say, for example, that may happen, once in, like, say, 5 years, 10 years, or there may be scenarios like, default by a counterparty. It may happen more frequently. Then another aspect or risk assessment criteria which you may consider is velocity. What is the speed of onset of an event? How quickly, organization has to respond to it. For example, think of fire in the server room. You need to act very, very quickly. On the other hand side, because of an operational error, there was an extra payment being made to a vendor. So that is something which the business has got time to fix. They can reconcile, they can speak with vendor, and they can fix it. Wherein in case of fire, the response time need to be pretty quick.
Sorry to interrupt, sir. Sir, I think slides are not moving.
Okay. Vikas, actually, I'm just talking about this, so I have not lifted all of these criteria.
Please continue, sir.
Okay. Then last is like volatility. So that's very interesting, wherein the predictability of risk changes, and it's very difficult to make a point in time estimates of impact. Say, for example, commodity pricing, or I take another example like because of the current COVID situation, no one knows how it may pan out in India, but definitely it may have a God forbid if it happens, then it may have a adverse impact onto the hospitality industry and onto the multiplexes as well. But at this stage, it's too difficult, to predict the same. So all of these factors or risk assessment criteria need to be considered when we are evaluating the risk. Okay. These are some of the type of risk which we have listed, and as I have mentioned in the below, this is just an indicative list. It is not exhaustive. Depending on the scale, size, nature of operations, nature of business, an organization may tweak it, may have more bespoke risk taxonomy. If I talk about any typical financial services organization, their risk taxonomy may run into not less than 100-150 type of different risks. Even within our organization, we would have as much risk, but basically they all will stem from these only, and they will be defined at a more granular level. Operation delivery under the operation risk, so it may include like multiple BAU transactions pertaining to operations. It may pertaining to purchase, sales, vendor payments, your payroll related aspects. All of it may come under it, and you may keep on defining it at a granular level, as I said earlier, depending on the scale of operations. Statutory compliances, again, it may be further broken down. So if you think it more from a statutory compliance framework, it may start with identification of new amended compliances. The next step may be interpretation related aspects, whether the laws have been interpreted appropriately in line with the business, the applicability has been evaluated, and finally is the implementation of it, how the statutory laws have been implemented. So there may be risk at each stage. So there may be risk that we may not be aware of the new upcoming regulation. There may be a risk we have interpreted it incorrectly. There may be a risk that we have not implemented it appropriately. So the first two steps were done: interpretation and identification and interpretation, but implementation didn't happen in the appropriate manner. Or it could be further like assuming a particular bank, you also, or basically any organization which may have both manual processes and FTP and the automated journeys. So you might have implemented the new statutory compliances into the automated journeys, but you may omit it into the manual processes, or the other way around. Financial reporting, BCP, DR, they are very, very generic. Technology, again, you may keep on defining depending on how complex your IT landscape is. It of course will include aspects like information security, disaster recovery, business resiliency, ransomware, those kind of stuff. Geopolitical supply chain, these are very, very generic. In terms of financial risk, credit risk, very straightforward. Counterparty risk, in case there is a default by any of the counterparty. Liquidity, cash flows related, market volatility related risk. Like in our organization, we have bifurcated this financial risk into two broad aspects. So one is the financial risk from an organizational standpoint. So wherein my money is invested, the organization's money is invested. Organization has given an advance. Organizations is dealing with the counterparty in their own capacity with their own funds. But on the other hand side, we have bifurcated it also with respect to the transactions which we make on behalf of funds. So I work for Fidelity International, which is basically a asset management company. So when we make investments on behalf of our customers for the funds which they have invested in, then there also arises credit, counterparty, liquidity, market related risk. So we have bifurcated it, one for our own organization, our own monies, and secondly, for the customers' monies. Strategic risk, there is a lot of news with respect to the various disruptive models, new innovations, new emerging technologies, be it AI, ML, what which is happening, and it is having a significant impact onto the businesses as well. Say for example, there were a lot of financial powerhouses in India. If I name a few, HDFC, ICICI, and all. But of late, we have seen a lot of new age startups which are coming up, be it like Zerodha or Navi, or very recently you might have started seeing ads of Shunne. They don't charge anything to you. So previously, for investing into a mutual fund or investing into any other related assets, you might have to pay 100, 150 basis bips to the broker. But now these new age startups or new age fintechs, they don't charge anything. So that is basically hampering your entire business. The established financial powerhouses need to rethink as to how do they align their model in line with that. Then that is from the broking side. If I think from the asset management side as well, there are a lot of robo-advisors which are coming in the market. So again, these robo-advisors, they invite you to invest your money. They provide all the customer service. They send you all the letters, communications via email. They are available at a telephone calls, and they don't charge you anything. So again, those are disruptors. Definitely, they have other models whereby they will be leveraging it. The data, of course, is the new oil, which they will be leveraging it, but it has a significant impact onto your risk as well. Or take example of like electric vehicles. So what I have learned that and read, the electric vehicles, they use far less number of moving parts or components as compared to vehicles which are based on internal combustion engines. Now, if 5 years, 10 years down the line we have more EVs flying on the road, think of the plight of all of those auto ancillaries, like companies like making lubricants. If there are lesser number of moving parts, perhaps they have to rethink of their strategy. Business performance, ESG, environment, sustainability, that's again, very topical topic these days. But basically, this is more, to give you an idea that the spectrum of risk is very, very broad, very broad. Okay. Okay. This is wherein this is actually sample impact matrix, and I've randomly taken it from Google, but basically, this is pretty good, to explain about how the risk impact matrix works. And again, depending on the scale and size of operations, your nature of business, you can make it bespoke, you can further tweak it. But herein, as we can see, that the impact may be on safety, quality of service, reputation, environment, cost, legal. So it has divided, the impact on multiple aspects and parameters, and then it has further bifurcated as to what may be called an insignificant impact. So if there is a loss, but which falls within the range of, let's say, $0 to $100K, then it may be construed as insignificant. Wherein if it is greater than 2.5 million, then it may be construed as severe loss. So again, go back to the definition of risk, which is a function of impact and probability. So if there is a risk event which may lead to, let's say, any financial exposure of 50K, 50K UFD, then probably, it's insignificant from this organization's perspective. There's another thing within it, that typically all of these risk impact metrics, they are set at an entity level. And this is a practical problem which we face quite frequently, when we work with large MNCs. So they have this impact metrics at a large level. All of this is being set considering the size and scale of their operations. Now, think of a scenario that you are auditing a particular process, and you come across a financial exposure of 50K or even 100K, which is like 82 lakh rupees. It seems to be a pretty big amount, from any Indian company standpoint. But when you evaluate it against the MNC's organization level impact matrix, it may fall at the bottom level, insignificant. So you need to be mindful of those aspects when you do a risk-based internal auditing. Okay. Coming to risk-based audit, I have taken this definition from ICI Basic Principles of Internal Audit, and look at the underlined text over here. The internal audit should identify the important audit areas through a risk assessment exercise. This is one of the most important things. So when you are looking at your audit universe, what are the most important areas? And how do you rely upon it? It shouldn't be on the basis of a gut feeling. It shouldn't be on the basis of your experience, but there should be an objective documentation. There should be an objective risk assessment tool, which should be driving and help you identify as to what are the important audit areas. Risk assessment exercise, as I said earlier, it may be done by the first line on the basis of risk pools which are defined by second line, and then internal auditor may also do a risk assessment from their perspective as well. I have covered it more extensively in the example subsequent slides. Then the next is tailor the audit activities such that the detailed audit procedures are prioritized and conducted over high risk areas. So this is the whole crux of risk-based internal auditing. You need to spend more resources, you need to spend more time, you need to have more detailed audit procedures for areas which are high risk areas. Think of two areas within your audit universe. So there is one, say for example, your payroll, again, very, very important, no doubt. But if you compare it with respect to, let's say, ransomware, or if you compare it with respect to, your firewalls or information security, then definitely, the information security and ransomware will be more prioritized. You would like to spend more time and resources over it. You would like to do it in a more detailed manner. While less time is devoted to low risk areas through curtailed audit procedures. Goes without saying, once you have identified what are the important audit areas, you need to make sure that more resources are allocated to the high risk areas and less resources are allocated to low risk areas. You may think of other means as well to get assurance over the low risk areas rather than spending too much time or rather than doing a full-fledged audit. Okay. One another thing which need to be considered, and this is quite related to the impact metrics and the practical example which I was sharing earlier. When we are thinking of risk under consideration, we need to be thinking it more from an company perspective, the overall strategic and company level objectives rather than narrowly focused on process objectives. So in the previous example which I gave, so there might be a process wherein you may feel that there may be a risk of financial implication, there may be a safety related risk or quality of service related risk. But if in entirety you feel that at a higher level it may fall very low in the overall organizational hierarchy, high risk area, then perhaps you need to revisit your thinking and you need to be spending less audit resources onto the same. A risk-based audit shall ensure the following threefold objectives. Again, taken from the ICI standards, and these are very, very straightforward. The audit procedure need not cover the whole process. So in earlier para, we were talking about detailed audit procedures for high risk areas and curtailed audit procedures for low risk areas. Herein we are going one level down and at a more granular level. So even within a particular high risk area, you need not be covering the whole process. So think of an scenario that you are working on a particular audit assignment, you perform walkthroughs, you understand the process, you prepare a process map, and you identify 5, 6, 7 controls within it. And then you may understand that, from a process perspective and more thinking from the company overall objective level, only 3 of those 7 risks are key. So if those 3 risks are well contained, then we can give a reasonable assurance that the process is being managed pretty well. So I can limit the substantive testing only to the important controls in the process. So again it goes back to the risk-based internal auditing at a area level, function, process, whatever you may call it, and even within those, it may be limited only to the important controls. Next is establish linkages to the aspects relevant and connected with company and functional objectives. One should not be, deviating and thinking, from the company strategic and overall objectives. It's again quite repetitive in nature, but basically reiterating the same thing that do not think from a process level objectives, but at a company level, what may go wrong. Findings and issues highlighted are significant and important. So this is another good benefit of RBI. So risk-based internal auditing, because when you are identifying, the significant observations and reporting to the stakeholders, it will make more sense because most of the stakeholders, they are very busy and they would like to hear only about the significant aspects which they need to work upon from the internal audit. No one has got time, to think of low probability. When you are doing a business, there will always be certain risks. But if those risks are within your risk appetite, those are being managed, then perhaps, you may not need to work upon those aspects. And before we move on to the advantages, so why risk-based internal auditing is to be done? So no organization in this world, can allocate indefinite resources to internal audit function, be it in terms of the number of staff or the budget in case it's outsourced, or for investing into various tools. So one has to provide assurance onto the limited means or whatever resources are available. Then on the other hand side, across all the organizations, the expectation from statutory authorities, the regulatory bodies, they are increasing. And the overall statutory and regulatory environment is getting very, very complex. So it's imperative that, the internal auditors focus on to the top risk rather than providing a cyclical auditing approach. In addition, I'm sure all of you would have been experiencing a lot of expectations from the stakeholders as well. So the need for value add, it has been increasing on an ongoing basis, and it's very important as well, considering the complex business environment which they work in. And I think even the fact that internal auditors have got a bird's eye view of the entire organization, and their mandate is also organization wide. They have access to all the personnel, they have access to all the functions, the information. I think it's good opportunity for all the internal auditors to expand our role expectations and also fulfill all of those expectations from the organization. Then it also provides assurance to board that risk management processes, they are managing risk effectively in line with the risk appetite. Now, if you look at it from a company's perspective, the audit committee of the company and the board, in consultation with internal auditor, it need to formulate the scope, the functioning, the periodicity, and the methodology for conducting the internal audit. But if there are some other statutory provisions within the Companies Act as well, which requires companies with certain thresholds to develop and implement a risk management policy, one, and also audit committee to comment on the implementation of risk management systems. Risk-based internal auditing turns out to be helpful in this case because in this risk-based internal auditing, the assurance is not only onto the controls but also on the effectiveness of risk management processes as well. And then there are some industry-specific regulations as well. So, like in financial services, RBI has mandated risk-based internal auditing for all the scheduled commercial banks for a pretty long time. But starting last year, the risk-based internal auditing has also been extended for not all NBFCs, but most of the NBFCs of I think all NBFCs which accept deposits, all NBFCs which do not accept deposit, but which has got an AUM of more than 5,000 crores, and they have also extended it to some. I think there's another set of banks. Basically, they have been expanding the remit where risk-based auditing is to be taken care of. Okay. This particular, advantages of risk-based auditing management. Since we have been talking that the risk-based auditing, it also provides assurance on the effectiveness of risk management processes. So these are the 5 things wherein we'll be more focused as part of risk management, risk-based internal auditing. As I said that it's the responsibility of management to perform a risk management exercise. So as part of risk-based auditing, when we are looking at risk management process, we also provide assurance that management has identified all the risks they have assessed in line with the risk impact matrix, and management has formulated requisite responses to all the risks which have been identified, and they have implemented controls to bring all the inherent risk within the organization risk appetite. So internal auditor will get an opportunity to evaluate all of it as part of risk-based internal auditing. Then second thing, maybe, the internal auditor also look at aspects that responses to risk are effective and they are not excessive. So think of a scenario that, in the vendor payment system, you may have put mega checker control or 4i checks, but still there are a lot of errors which keeps on happening. So you may go one level beyond, and you may have 6i checks as well, but probably that may not be required. You need to look into the aspects as to why, despite having a 4i checks, why it is still going above the thresholds. So there may be a training issue, there may be staff related matters issue, there may be process design related issues, or there may be some system issues as well. But you need to comment upon the fact that the responses to risk are effective, and there is no excessive bureaucracy or controls which have been put into place. Then actions are being taken for residual risk that are not in line. So after implementing all the controls, after implementing all the responses, there may still be certain risks or residual risks which are not in line with the risk appetite, and those need to be taken up to the requisite forums by management, of course, the requisite forums to comment upon it. The management may think of ways and means to bring it within the residual risk, and that should be the priority. But there may be scenarios wherein it may be too costly, or it may be down on the priority list. They may not want to spend too much money, and there could be any reason for that. And then the management may choose to risk accept as well. Of course, in those scenarios, the internal auditor should see that those risk acceptances are being evaluated by management on a periodic basis. Effectiveness of response and completion of actions are being monitored by management to ensure they continue to operate effectively. Now, the risk management, which was done by management, it was done at a point in time. And then management would have identified all the risk. Management implemented controls, and they bought the residual risk within the risk appetite. But it's imperative for management to make sure that those controls, they continue to operate. And for that, they need to have some testing on a regular basis. You may call it, are you in control, or something similar to internal controls of financial reporting testing, or there may be various other means and measures, but basically management should ensure that controls continue to operate effectively as designed. And then last is with respect to communication and information flow to the top management, to make sure that all the risks which were identified, the responses to those risks, actions which were being taken, the overall control environment, they are appropriately classified and they are reported to the senior management. Okay, so I'll talk a bit about SIA 220, conducting overall internal audit planning. So when we talk about risk-based internal audit planning, it may be at two levels. So one is at an overall organization level, overall audit universe and overall internal audit plan. And another is SIA 310, which talks about planning an internal audit assignment. So a particular internal audit assignment. Herein we'll be talking only about risk-based audit plan and audit universe. And since we are not talking about standards on internal audit, so I'll be covering, some limited aspects, and that too, I think I have highlighted in green color. Okay. As I said, the risk-based internal audit plan, when we are formulating it, it will be for the entire organization, and it has to be directional in nature. So it should encompass all of your business units, all the legal entities, and all the geographies, all the regions. So it should be one internal audit plan for the organization. Timing as well, till few years back, having this internal audit planning once in a year could have been fine, but we live in a very, very complex and dynamic environment. There are a lot of disruptions which keeps on happening on a regular basis. So it's imperative that, we may revisit it more frequently. Like in our organization, we revisit it every 3 months. The audit plan doesn't change so frequently. I mean, it's finalized for, let's say, 6 months and for additional 6 months, but definitely we revisit the audit universe, any new emerging risk, any request from the stakeholders, anything which is emanating from the regulators, and of course, do have flexibility and agility to embed that into our audit plan. This is alignment with organizational risk assessment, including risk mitigation measures, quite similar to what we covered over here. So there is nothing different. This all is coming from the standard knowledge of the business. Now, this of course is very, very important, because you need to understand your business. You need to understand the intricacies. You need to understand what what is the nature of our product, what are the nature of our services, what business environment do we operate in, what are the complexities, who are our competitors, what are our markets. All of that need to be considered. Like say for example, I was in the asset management industry, and we have mutual funds which we sell to our clients, and we sell it in 28 markets. Now every market, or basically every country, may have slightly different nuances in terms of regulatory expectations. Then the way those are being sold to the market or various sales channel, that comes with different sets of risks which need to be considered when we are preparing a risk-based internal audit plan. So if we are selling it to an individual, or when we are selling it to an individual but via broker, then there is additional party which comes into picture. Or we may be selling it to individuals but via wholesalers. So like think of scenario like ICICI mutual funds are being sold by let's say HDFC Securities or by Giroda, or you may be selling directly to the family offices or pension funds, or to large institutional investors. So every time the risk profile changes, and it's important that all of those is uh, understood comprehensively when we frame a risk-based internal audit plan. Next is management and stakeholder discussions. Again, it's quite generic but very important. Management knows their business in and out. They are running the business. They are the process owners. So it's important that the internal auditors have regular discussions with management and the stakeholders to understand what are the bottlenecks, what are the pain points, any specific risk which they are seeing, anything any flaws in their control environment. So all of that need to be considered. And also these discussions, this shouldn't be restricted only to a senior management level. It's advisable that we speak at all levels, middle management, process level as well, to get an overall and comprehensive and holistic picture of the situation. Audit universe, of course, that's the total compilation. Independent risk-based planning exercise, I'll cover in the next slide. Technology deployment. Again, the risk profile changes depending on the technology landscape of your organization. So how many technology applications have been developed in-house? How many are third-party applications? How many applications are hosted onto the cloud? How many applications are hosted, on your premises? How many application support activities, regular, operational aspects are being taken care of by the in-house teams? And in how many instances the application support has been outsourced to an organization? So depending on the complexity of the technology applications, the risk profile may change, and those need to be considered in identifying what are the riskiest areas. So you may think that again, if I take an example, you're operating in two markets. One of the market, you deployed a state-of-the-art application, and it's completely automated, end-to-end, provides an end-to-end view. And on the other hand side, you are using an old legacy application which was developed over a period of time, and a lot of patches has been updated into it, and it's quite flaky in nature. So assuming that all the other aspects, or the business which is run out of those two applications remain the same, still you may like to devote your energies to the application which is more flaky. So that again, drives your risk profile. and it's imperative to consider it to identify areas of highest risk. Resource availability and regulatory statutory expectations, they are not specifically, I would say, pertaining to the risk profile, but they definitely, takes up a lot of bandwidth. So as I said that no organization has got infinite resources. So if you have X number of resources, you need to be mindful as to, there may be 10 highest risk areas, but you may not have bandwidth to cover all of those. You may have only, 5 resources to cover 8 or 9 of them. So again, considering the number of resources which are available, considering the skill set of the resources, you need to tailor-made your risk-based internal audit plan. Regulatory statutory expectations, again, it impacts your bandwidth. So on the basis of your risk-based assessment, you may find that some of the areas are not high risk, but then there are some specific regulatory or statutory expectation they would like you to audit it on an annual basis or on a more frequent basis. In that scenario, though it's not a true risk-based internal auditing, but since there is a regulatory requirement or statutory requirement, you need to adhere to it, and that of course will eat up your resources. So, and the remaining resources again need to be assigned onto the areas of highest risk. This is an example, from my organization, how we perform periodic audit planning to derive a risk-based internal audit plan. Okay. So this is a high-level picture, and the chief audit executive level, underneath them, we have defined various auditable businesses, technology, support functions. It could be HR, finance, business unit 1, business unit 2. I'll keep on switching between this Excel sheet and the PPT to give you a better perspective. So think of this at level 1, HR, I have taken an industry agnostic examples, HR and technology. Within HR itself, you may have payroll, you may have talent acquisition, talent development, compensation and benefits. Within technology, it may be security. Security may further be defined at network security, threat intelligence, information security. So you may keep it defining it, and on the basis of size and scale of your operations, the nature of the business. But this is how we have defined it. Our audit universe, L1 level, L2 level, further broken down, and we have taken it to L3 level as well. Now, each of these auditable objects, they are being assessed by the internal audit team on a frequent basis. Herein, if you see, these are some of the factors which we consider, and you may notice that, this is the risk assessment which is performed by the internal audit team. And within these factors, I have again lifted risk assessments. This is the risk assessment which is performed by the management. So that is one of the inputs, and in fact, a very good, reliable input which can be considered when we are formulating a risk assessment. So we consider various factors and we consider these factors against each of these auditable objects. So we'll look at various inherent risk factors. We'll look at various control environment related factors. We come up with a scoring for inherent risk. We look at the scoring for the control environment. What is the residual risk? There may be certain scenarios when we might have to apply override over the residual risk. So, or on the face of it, it may look that, the residual risk is very low, but we may feel that, there are certain issues, there are certain specific requests from the management, or there may be certain regulatory expectations. So we may like to, use an override as well. So this is how we do it. In terms of how do we, get information for populating all of these inherent and control environment risk factors, we look at a lot of information which is available within the organization. So first and foremost, of course, statutory and regulatory requirements. So if for a particular auditable object, if there is anything specific which needs to be considered from a regulatory requirement standpoint. Say, for example, in UK, the internal auditor need to opine on certain aspects, client assets. So basically, all the asset managers, financial services, they need to segregate their own assets, basically companies' money, and they need to segregate the assets of their investors. And there are some specific regulations for internal auditors to comment upon those compliance of those client money and assets requirements. So if I am evaluating my client money related auditable object, I will definitely be considering all of those expectations. Then comes risk assessment. As I said, this is the risk assessment which has been performed by the management. So management would have performed a risk assessment wherein they would have considered the overall process, they would have considered the overall function, they would have identified all the risks, not key risks, but in fact all the risks, because when management is doing it, it will be quite comprehensive in nature. They are expected to identify as many risks as possible and to make it as comprehensive as possible. So they would have identified all the key risks, they would have lifted down all the controls which have been put in place to mitigate those and to bring those risks to bring the residual risk profile within the risk appetite. So that is a very good input. When I am considering my inherent and control factors for a particular audit object, I will be considering the risk assessment done by the management. So if management itself is saying that if for a particular process the residual risk is pretty high, then in no way the internal audit can assess it at a lower scale. There may be scenarios you may still apply an override, but you need to have a very genuine reason for it. Management information, again emanating from the management, the KRIs, the KPIs which management is monitoring for a particular process and the function, that need to be considered. So you may consider what has been the trend of KRIs, KPIs. Have there been a lot of incidents? Has there been a lot of issues? Has there been whether the overall function is being managed, or the performance of the function is being managed in line with the management expectations? So the management information speaks volumes about a particular process, and you can leverage onto that. Projects, again, for a particular auditable unit, if you know that there is a large transformation project, there is a change project which is happening, you are moving from system A to system B, then it's worthwhile to be considered, because there may be additional risk which may emanate during the transition period. So those needs to be considered. Discussion with management stakeholders, we have covered previously. Tech incidents, risk event. Tech incidents, again, I covered briefly. So if there are two markets, two applications, one is working seamlessly, wherein the other application is flaky in nature, breakdowns quite frequently. There are a lot of incidents which are happening within that particular application. Then again, you will be considering it as an input in thinking if this particular audit object is high risk or low risk. Risk events, if there has been some risk events in a particular area, again that's an input. So there are certain areas which are more prone, wherein there are more operational errors. They will have large number of risk events, and then you may also like to bring it within your risk-based internal audit plan. Industry info, that's the professional judgment of the internal auditor, their overall skills and the experience, their understanding of the industry. If there has been any risk events, any new challenges, any new expectations happening in the industry level, so those may be considered. Risk governance forum packs, to a large extent, so this is at a higher level than the management information. So by part, I'm sure, so in many organizations, internal auditors also get a seat onto the risk governance forums, and they get to see, how the processes and the functions they are being run, what are the emerging risks, the horizon scanning is being done by the management or not. So all of the inputs from internal audit's participation in those risk governance forums may be considered to perform their own risk assessments. External oversight, open known issues, anything which is already known to the management, or which is still open from the last audit or by the management or by the internal audit or by anyone else, those may be considered. So all of that is being considered, it's being populated in all of these risk factors. And again, you can have a bespoke model for performing a risk-based internal audit planning. It gives you an inherent control score. You identify at a residual risk, and then depending on the availability of resources, depending on the mandate, you may have a true risk-based audit plan, which is backed by a detailed exercise. And this is another thing. This is how we have made sure that all of our audit objects, they are aligned with respect to the organization policy and legal entity. So herein it's more from a risk perspective, and this is more from a comprehensive assurance perspective. So I may get to see that, the organization policy, just an example, information security policy. So that's a key risk, but that is impacting, let's say 50% of my processes. So that's another indicator for me to see that, it should be a part of my internal audit plan, risk-based internal audit plan. And this is, to provide assurance over the legal entity. So if I have even appropriate assurance over all the legal entities or not. It also shouldn't happen that, in pursuit of risk-based internal audit plan, we missed out, let's say, these two entities at all. So again, there are a lot of nuances within it, and it depends on your organization. That's it from my side. Thank you for a patient hearing. And in case you have any questions, Vikas, over to you.
Thank you very much, sir. So we have a question answer session now. For 10 minutes, we have 4 questions.
Yeah.
And your deliberation was also insightful, sir. And we got to see your actual data, how you work in terms of internal audit. That is a bit good for us. And we have 80 plus questions. So most of them are not relevant, I think. Let's try to take few of them.
Sure.
The question asked by Mr. Bhargav. The question is, what does global trends suggest given rise in the bank frauds?
Okay, sorry, can you repeat, please?
What does global trends suggest given rise in bank fraud?
Okay.
So it's not mentioned whom the question is raised, so anybody can take.
Okay. Ashnaji, would you like to start?
So there are a few reports by Gartner and other research agencies, and what they have listed in the global trends is a detailed matrix, and cyber security and cyber threats. These are the number one trends in the banking frauds. If you see it, identity, synthetic identities, stealing of identities. These are also important factors in the global trends in banks. Yeah.
Absolutely, Ashnaji. And I think I heard a piece of your presentation as well. You spoke about identity theft as well within it. So that's one of the key, thing which is coming up, social phishing. And I'm sure most of you would have seen the Netflix series Jamtara. It says "Sabka number aayega." So that's their tagline, and that itself says that you need to be mindful of the social phishing, and you need not be sharing your basically customer related identifiers as well. I think a couple of weeks back there was a news item which came in as to somebody's bank account was siphoned off by 50 lakh rupees, and that too just by a missed call as well. There may be an issue of call forwarding or SIM swapping, something like that, but that again could not have been happened without impersonation. Somebody might have taken another SIM, duplicate SIM, or cloning of the SIM. So that's one of the number one thing which is coming in at an individual level. In terms of at an organization level, I think banking fraud, if you talk about of course the governance related aspects which we keep on hearing, why the India in Indian banking system, the NPA is already on the rise. So that has always been there. But if you talk about global trends for banking frauds at a individual level, I think this is the one. Social phishing and
next question is: are we eligible for overseas assignment raised by Mr. Rajan Gupta from NIRC?
I'm not sure, Vikas. Maybe what we can do is that you may check in with the ISP at a later stage, and we can get back to the delegate.
Next question. Question raised by Mahendra Kumar Gupta ji. Please tell us whether internal audit trends in other countries is better than India.
Yashna ji.
Yeah. So I think what the delegate is actually wanting to know is, a comparative study of various countries vis-a-vis India, right? And as you have rightly pointed out, NPA is still a big concern for the banking industry. But to tell, I mean, as far as banking is concerned, RBI has been at the forefront and, has been quite innovative in embracing all the required controls. And we stand at a pretty comfortable phase compared to the global frauds, because someone is watching, and there's a regulator, which brings comfort into the situation. And today also we have heard that there was a news and wherein there was a conflict of interest some years back in a leading bank, and the CEO is also not spared from that. So I think all the regulatory steps, all the required steps, we have the required environment, whether it's CBI, Enforcement Directorate, RBI, to take care and put the faith of the customer in the system. Not only that, even the opening of a common portal for all the customers, for all the complaints for all the various industries, including insurance, banking. So that is also a very comforting situation, is what I would say. So yes, we are better, and we have a good regulator, is what I would say. And the audit mechanism is quite strong. But yes, we cannot be complacent about it, and we need to ensure the independence and ensure that we are on track.
And just to add, my organization works in 28 countries, and given that got an opportunity to have an understanding of the internal control environment or internal audit related expectations from across geographies. In fact, a few years back, we also did an exercise to understand, what are the regulatory or statutory expectations from an internal auditor. So we keep on talking about, the regulatory statutory expectations from the business, but therein our focus was more on, what is expected out of an internal auditor, and if it is something which is hard coded in any statutory or regulatory requirement. I'm happy to say that, India is one of the very few countries wherein the internal audit related aspects, requirements, and the requirement for commenting by the statutory auditor, it has been lifted in our Companies Act. So definitely, there are certain countries which are more advanced, but overall, we are in a very, very good shape.
Next question is probably this question is to sir, Rajiv sir. Are we need to learn coding?
I think Rajiv is not sure if he's around.
Because he talked about a lot about coding and application.
Okay, so Ashna ji, if I may take this.
Sure. Please take it.
Okay. See, I myself am a CA and not from the technology background, and I'm sure most of the people around the call will not be from the technology background. But over a period of time, the technology has taken a forefront. Technology is no more, an enabler. It's basically driving the business from the front. And it's very, very imperative that, we need to be aware of, and not aware, but basically, we should be embedding IT skills into us. I'll come to the specific aspect as well. Think of, all of the fintechs, think of, all of the newest startups. So they are all working, remotely. They are all working seamlessly via an app. So most of your internal related aspects, operations and everything, it can't be done, just auditing around the computer. It has to be, done auditing through the computer. So it's imperative that you have got a fair understanding of the technology aspects. Within our team, what we have done is the tech auditors were always in short demand. And in last few years, we have seen that despite increasing the number of tech auditors in our team, they are still continue to be in short demand. And that's a very niche skill, if I may say, a tech auditor in a financial services industry. So what we did, we developed in-house training programs for all our business and operational auditors. So we trained them on the core ITGC. We gave them a good perspective about the ITGC related aspects. We had 2, 3, 4 days training. Thereafter, we gave them appropriate opportunities to work on ITGC related aspects. And we buddied it along with the tech auditor as well. And they did it for, 1-2 quarters. I can safely say they are not going, to be able to compete with a technology auditor or basically an engineer, but definitely, they are doing a good job. In the process, what we also did that we freed up a lot of bandwidth from the tech auditors and we deployed them onto some key areas. So like, we did robotics audit 4 years back, or, the bots we have been using for 4-5 years, AI, ML, ransomware, cloud, network security. So it's a win-win situation for everyone. So far, I would say that there hasn't been any need that, we need to learn computers. There are certain regulations in US for certain industries wherein, the regulators are expecting, and this is in very nascent stage, wherein they expect regulators, to look into the code as well. And there are very softwares as well, but to be very frank, it's too complex. It's really too complex, not only from an CA or an operational auditor, but even from a technology auditor. You may be, looking at a code, and in fact, the current assignment which I am working upon in this quarter, we definitely looked at code as well, but we took help of an SM. It's too difficult to look at it, and despite looking at it, it's very difficult, to give an assurance. The code may run into lakhs and lakhs of line items, and you may be looking only a small part of it. There's a whole team of developers which get into it. So. But yeah, basic skills like, SQL, Python is something, which you may not now, but maybe a couple of years down the line, you need to start thinking of working onto it. Because even for data analytics as well, you should be, self-sufficient. And there are a lot of easy to navigate courses which are available on Udemy, which you may look at. So SQL is something which you can definitely look at, but nothing much. Maybe Excel-based macros, and that's it.
It's a connected question with the previous question. As with more and more automation and softwares taking over, how do we see our role as internal auditor?
That's very interesting. And as I said that, if you think of a bank, you will think of, the bank branches, the concurrent audits. But then a couple of years back, there was, I don't recall its name, there was a internet-based bank only in Korea, and they came out with an IPO as well. Now, if you happen to be the internal auditor of that bank, think of your position. And I think that's what you're wondering. So the fundamentals do not change. Even in case it's in maybe most of the transactions are getting automated, the fundamentals do not change. I give you one example. Like we are mutual funds. We are an asset manager, and maybe 10 years back, most of our transactions, would be manual in nature, wherein if you would like to buy, sell, or switch, basically, let's say sell HDFC and buy ICICI. So that's we call switch. So if you would have wanted, to do a buy, sell, or switch, you might be giving us, a written instruction. which is a manual in nature. Somebody will punch in, somebody will trade in for you, and then the reconciliation will happen. Fast forward now, 80, 90, 95, not quoting exact numbers, but those transactions will be FTP journeys. So it will be happening automated. You will be authenticating yourself onto the web. In fact, take example of Zerodha, right? You will be authenticating yourself onto the Zerodha app. You will be making payments online via net banking. It's all connected, and come on, the deal is done. But at the end of the day, somebody need to do a reconciliation. The reconciliation which we were doing 10 years back, we are again doing the same reconciliation. That whether what is that we are settling with the market, whether whatever we are settling in the market, whether we have got it from our customers or not. Previously it was manual, now it's automated. Now, if in the current scenario, if we do an audit assignment pertaining to dealings, we consider both manual journeys and the FTP journeys as well. And in fact, what we have seen is that over a period of time, because of all of these technology enablers and FTP or automated journeys, our life has become more easy. It may look complicated, but as you get into it, you will see that it is making our life pretty easy.
Right. So I think these are the relevant questions I got. All our other, although list was very long, but I did not find any relevant. Slot could be detected. So questions are done, sir, and we can conclude the webinar. ज्ञान चंद्र सर अभी available नहीं हो पा रहे हैं, so we should be concluding this webinar. And thank you, sir. Thank you, ma'am, for your time and insightful information and learning everyone got here. Thank you, everyone, for joining the webinar.
Thank you, Vikasji. Thank you, everyone, for the opportunity. Bye-bye.
Thank you, Vikasji. Thank you, Bharatji.
Bye, ma'am.
Okay. Bye. Bye, Ashna ji. Bye-bye.